Hi, I'm Rainey with Finance Strategists. In this lesson, we're going to cover
TTM, or trailing 12 months, also sometimes known as the rolling or last 12 months, is a financial term used to describe a company's financials in the last 12 consecutive months. Trailing 12-month figures include the financial metrics for the last 4 quarters, which amounts to a full year of business performance. However, the time frame for TTM does not necessarily match the company's fiscal year that it uses for accounting purposes. The previous fiscal year is the predetermined time frame used for tax and accounting purposes, whereas the trailing 12 months refers to the prior 12-month period up through the most recently updated financial records. Looking at trailing 12-month numbers is useful because these are the most current annualized numbers, which reduces the effects of seasonality. TTM measurements are usually reported on a company's balance sheet, which is updated quarterly. These TTM measurements are often used to calculate financial ratios. For example, the price-to-earnings ratio is typically calculated with the current stock price divided by the trailing 12-month earnings per share. There are 2 common ways to calculate TTM metrics. The simplest way to calculate a company's TTM financials is to add up the numbers from the last 4 quarterly reports. For example, let's say that the latest report was for the 3rd quarter, or Q3. Then you can calculate the TTM numbers by adding them up from Q4 last year and Q1, Q2, and Q3 this year. The other, more commonly used method to calculate TTM is slightly more complicated than simply adding up the last 4 quarters. TTM is calculated by taking the numbers from the annual report, adding the numbers from the most recently recorded quarters, then subtracting the equivalent quarters from the previous year. For example, if the latest quarterly report was for Q1, then you can add those numbers to the last full year's numbers from the annual report and subtract the previous year's Q1 numbers. Calculating TTM this way allows investors to check the year-over-year difference for the financial metrics they are analyzing. Let's test your understanding of TTM. If the most recently completed quarter was Q4, would analysts still need to calculate the trailing 12 months? Leave a comment below.
For more information, visit www.financestrategists.com. Finance Strategists, strategies for your future.